Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing PayPal stock so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 72 billion market cap. They're trading at $65 a share, and they have 1.1 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow is pretty steady from 2020 to 2022, around 5 billion. It does drop a bit in the trailing 12 months to 3.4 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that's pretty steady around 4 billion. It was low in 2022 at 2.4 billion, but it came right back up in the trailing 12 months. Revenue is a sales for the company, and that grows nicely from 21.5 billion to 28.5 billion. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 123 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $108 billion. We divide that by 1.1 billion shares. And we get a calculated stock price of $98. They're trading at $65, so they're trading at a 34% discount. It's a strong buy according to the model. Their stock has come down a ton the past couple years. So it seems like there's a lot of upside potential with this company. There are 57 companies in the same industry as PayPal, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend more than the median in average in CapEx. They spend $680 million. CapEx are the investments in property, plant, and equipment. They have a really good debt to equity ratio of 0.5. That means for every dollar of equity, they have 50 cents of debt. They do not pay a dividend. They generate lots of free cash flow, but a lot lower than the top 3 companies in the industry. They rank 4th in market cap out of all the companies. All their price multiples are worse than the median, but fairly close to the average. They generate lots of free cash flow, more than MasterCard. And MasterCard is 5 times the market cap. That's why MasterCard's price to sales is so much worse than PayPal. And they're growing a lot. Their 5-year annual revenue growth rate is 15%, which is about double American Express. Look at this company, Blue Owl Capital, 45%. I never even heard of that company. Maybe I'll do a video on them. PayPal released their second quarter earnings this week, and they just beat revenue. They missed on earnings. Their expected earnings were $1.16. They reported $1.16, so they missed 0.3%. Because they didn't report exactly $1.16. It was probably 1.158 cents, something like that. They just beat revenue. They expected 7.27 billion. They reported 7.29 billion. Last quarter, they did beat revenue and earnings. Let's take a look at their second quarter press release. Total payment volume, 377 billion. That's the cash value of all the transactions from its customers, which is up 11% from the second quarter of 2022. Revenue of 7.3 billion, which is up 7%. Operating income 1.1 billion, up 48%. EPS positive 92 cents compared to negative 29 cents last year. And they had a negative operating cash flow, negative 200 million, and negative 400 million of free cash flow. That's mainly due to a negative 1.2 billion from European buy now, pay later loans. Buy now, pay later loans are short-term loans. Sometimes they're called point-of-sale loans. So it just means you buy something on a website. Say you go to Amazon and buy something for $200, but you pay for it over the next 4 months. So you pay $50 a month for 4 months. So you buy now and then pay later. Next quarter, they expect revenue to grow 8%, EPS to be 85 to 87 cents, and they expect full year 2023 EPS to be 349. They're projecting 5 billion of stock buybacks. Here's a little visual of their Q2 highlights. Revenue 7.3 billion, up 7%. Operating income 1.1 billion, up 48%. EPS 92 cents, up 400%. Total payment volume is an important number to track. That's 377 billion, up from 340 billion. That sounds like a big number, but Alipay, their total payment volume is like 20 trillion US dollars. 20 trillion for 12 months. so about 5 trillion a quarter. Alipay handles all the transactions for Alibaba. That's why it's so big. Let's go through their income statement. Net revenue of 7.3 billion. They make most of their money on transaction fees. That number was 6.8 billion in the second quarter of 2022. For the first half of 2023, it's 14.3 billion, up from 13.3 billion. My phone keeps buzzing. Amazon released their earnings and the stock is up 6% after hours. They had revenue of 134 billion for the quarter. The estimate was 132 billion, so that's why the stock is up. Let's go back to PayPal. They have to pay fees to the merchant, the credit card company, for each transaction. That's 3.5 billion. That's most of their fees. Sometimes people take loans through PayPal. In addition to loans, PayPal backs each transaction, so they have losses, 400 million, from the people who don't pay. They have customer support. When you call PayPal and you talk to somebody, their salary is part of customer support, 500 million. They do lots of marketing, 465 million. Technology fees, 740 million. G&A, 490 million. So total expenses, 6.2 billion. Operating income, 1.1 billion, up a lot from 764 million. Their net income is 1 billion. Last year, they had a net loss of 340 million. That's mainly from this negative 715 million in other. So their EPS is a solid 93 cents. Last year was negative 29 cents. They are reducing their shares outstanding. Last year was 1.16 billion. Now it's 1.11 billion. Let's look at their balance sheet. The balance sheet lists the assets, liabilities, and equity of a company. Their current assets are 54 billion. Current liabilities, 42 billion. So their current ratio is above 1. They can cover their current liabilities with their current assets. 5.5 billion of cash, down from 7.8 billion. You can think of short-term investments as cash. So they actually have 9.8 billion of cash, compared to 10.7 billion from last year. Accounts receivable is 900 million. So they're owed this money from their customers. They loan money out to people, I think mainly small businesses. They're owed 1.9 billion and 5.5 billion on those loans, so 7.4 billion. Funds receivables are the funds people are transacting to other people. That's 33.6 billion. You should see a similar amount in payables, 37 billion. Lots of goodwill, 11 billion. This is from acquisitions. So total assets, 75 billion, down from 78 billion. They have 3.4 billion of accrued expenses. These are expenses they've incurred but haven't paid it yet. For example, bonuses for its executives. They have 10 billion of long-term debt. Total liabilities, 55 billion, down from 58 billion. Let's look at their equity section. They bought back lots of stock, 19 billion worth. They raised 19 billion from selling their business, from selling stock. They profited 21 billion from running their business. Total equity, 20 billion. The reason their equity went down from last year because they bought back 3 billion of stock. When a company buys back stock, it decreases their cash and decreases their equity. Treasury stock is a contra equity account. It brings down your equity balance. That's why it's negative. Let's look at their statement of cash flows. In their operating cash flow section, they had a cash outflow of 200 million for this quarter, compared to a cash inflow of 1.3 billion. You should really strip out the negative 1.5 billion. That's a one-time occurrence. So they actually have positive 1.3 billion. This is the European buy now, pay later loans. So it's more of a timing effect on their cash flow. Let's look at their investing section. They only invested 150 million in PP&E, and they have lots of inflows and outflows from those loans. When people pay back the loans, it's an inflow. When they give out the loan, it's an outflow. Instead of sitting on cash, which doesn't earn interest, they buy investments, usually short-term investments. 4.4 billion this quarter, and 5.3 billion of investments matured. In their financing section, we could see how much stock they bought back, 1.5 billion this quarter, double last quarter's number. For the first half of the year, 3 billion of stock buybacks. Here's their adjusted free cash flow. You see they add back the 1.2 billion from the European buy now, pay later loans. So they actually have positive 869 million of free cash flow. In my model, I do have negative for this quarter. I didn't add back the 1.2 billion. I use GAAP numbers for my calculation. This is a non-GAAP number, the 869 million. Here's a breakdown of their revenue. The 7.3 billion of revenue, 4.2 billion is in the US, 3.1 billion international. So the US revenue only went up 2%, international 6%. Here's a different breakdown of their revenue. Of the 7.3 billion, 6.6 billion is from transaction fees. Only 730 million is from other services, like their loan products, for example. And non-transaction revenue is up 8% quarter over quarter, 37% year over year, while transaction revenue is only up 3% quarter over quarter, 5% year over year. But transaction revenue is 90% of its revenue, so their overall revenue is only up 4% quarter over quarter, or 7% year over year. Here's a breakdown of their customer accounts and the TPV. Their active accounts actually has gone down. It's 431 million. It's gone down 2 quarters in a row. Last quarter is 433 million, before that 435 million. So that's definitely not a good sign. But the total transactions have gone up, 6.1 billion. And that's the highest quarter ever. That's up 4% quarter over quarter, 10% year over year. I probably do 100 transactions per year on eBay, but the average customer is 55, which is their highest ever. That's not just eBay. That includes all their platforms. I think I use Venmo even more, probably 150 times a year. So for my account, it's a total of 250 transactions a year. They had the highest total payment volume, 377 billion, which is up 6% from last quarter, 11% from last year. So their fees are about 1% of their total payment volume. So 1% of the 377 billion they have in fees, like the credit card companies. And they probably charge their customers 2, 3, 4% fees because they have to make money. Some customers may only pay 2 or 3% if they have large business accounts. But an individual who doesn't do that many transactions a year will probably pay higher fees. If you invested $10,000 into this company when they started trading in 2015, you would have peaked at about $70,000 at one point. But if you're still holding on, you'd be at $20,000 today, which is a decent return. It's a 9% annual return, 100% total return. Let's look at the company on Simply Wall Street, trading at $73, 82 billion market cap, up 1.6% in the past week, down 25% in the past year. Let's learn a little more about the company. PayPal operates a technology platform that enables digital payments on behalf of merchants and consumers worldwide. Their products are PayPal, PayPal Credit, Braintree, Venmo, Zoom, PayPal Zettle, Hyperwallet, PayPal Honey, and Paydy Names. I never even heard of that before. Paydy Names? Hope I'm saying that right. People can send and receive payments in 200 markets across 150 currencies. They can withdraw funds to their bank accounts in 56 currencies and hold balances in their PayPal accounts in 25 currencies. A lot of different currency options. They were founded in 1998, headquartered in San Jose. Did you know Elon was involved in PayPal in the beginning? There was a company called Confinity. It was established by Peter Thiel and a couple other guys. That was in 98. In March 2000, Confinity merged with X.com. And X.com was founded by Elon Musk and some other guys. But Elon was booted out and Peter Thiel took over as CEO of X.com. Then he renamed the company to PayPal in 2001. They went public in 2002. Then they got acquired by eBay for $1.5 billion in eBay stock. And then eBay spun off PayPal into a separate company. Simply Wall Street values the company at 176. They say it's 58% undervalued. Here's where the stock has been trading since they IPO'd. They IPO'd in 2015 when eBay spun off the company, $36 a share. It was over $300 in 2021. And just a few months ago, it was $60. The last time it hit $60 was in 2017, but it is creeping back up. I'm pretty sure it's going to be triple digits by year end. This valuation we looked at, the 58% undervaluation, is by an equity analyst, this person. Simply Wall Street's valuation is $91. They say the stock is 20% undervalued. 43 analysts priced the stock at $94. They say it's 28% undervalued. Look how much their revenue has climbed since 2012. It was $5.7 billion, and it goes up every single year, hitting $28 billion currently. The forecast by 2025 is $35 billion. In 2013, they had $1.1 billion of debt. They were debt-free in 2015, 16, and 17, and they've been growing their debt up to $11 billion currently. You can see their equity is always higher than their debt. Their current debt to equity ratio is 55%. So 55% of their equity equals their debt. But you can see they have lots of cash. They pretty much have enough cash to pay off all their debt if they wanted to. The CEO's salary is $1.25 million, total compensation $22 million. His tenure as CEO is 8 years. In the past 12 months, 1 insider buy, 1 insider sell. 74% of the company is held by institutions and 26% by the general public. The biggest shareholder is Vanguard at 8.6%, 96 million shares valued at $7 billion. Their employee count was 16,000 in 2014. It peaked at 31,000. But it's down a little to 30,000. The ticker trades in lots of places: the Nasdaq, Deutsche Börse, Xetra, Mexican Bolsa, London Stock Exchange, Swiss, EuroTLX, Wiener Bourse, Lima Bolsa, Bulgaria, Kazakhstan, BATS Europe, Buenos Aires, Sao Paulo Bolsa, and the NEO. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.